5 financial goals. That's it. Not 50, not a 100-page plan collecting dust in a drawer, 5. And if you get these right, in the right order, you could save yourself years of stress and avoid the single biggest mistake most people make with their money. Here's what nobody tells you about that mistake.
This video is for educational purposes only. Always consult professionals before making legal, tax, and investment decisions. So this is hard to believe. People truly spend more time planning their vacations than they do their retirement. Think about it. Which cruise, which cabin, what's the right excursion to go on? But when it comes to your financial life, it's mañana. I'll do it tomorrow. Tomorrow becomes next year, and next year becomes, next thing you know, you're 60. The problem isn't intelligence, and it's not discipline either. It's just you're so busy. You're distracted, and you postpone it.
And here's the thing. Life usually doesn't derail financial plans with one big event. It's a slow creep. It's the, I'll get to it later. So what we want to talk about today isn't doing everything. It's choosing the 5 right things. Because there's a difference between having all the right answers and having or knowing the right questions to ask, or having somebody help you have the right questions to ask. So let's get into it.
So goal number 1, know your number. Not the retirement number, not how many million threshold you need to meet. What we're talking about is something way more personal.
So here are the questions, the initial questions at least. What lifestyle do you actually want? How much is it going to cost? Everything we do in retirement can be priced and adjusted. If you want a new boat, is the new boat in 1 year, 3 years, 5 years, 10 years? And how much is it going to cost? We can price, everything can be priced. Retirement income planning is just a big math problem. It's a really complicated math problem, but it's a big math problem. But most people never ask the right questions or that exact question. They just assume they need more without defining what enough actually looks like.
So there are other questions underneath that. Big one. What do you want your money to do for you? What are you no longer trying to prove? What's actually important to you about your money? Not what you think should be important. What actually is.
When you get clear on those answers, I think something shifts. You stop chasing a vague number and you start building towards something real, an actual plan.
Goal number 2, stress test your portfolio. Here's what we see all the time. People assume their portfolio is fine because the market's been good. But here's the question. What happens when the market isn't good?
When I started in the business, a financial advisor told me that you're going to see 4 bear markets in your career. And I thought, that's a lot. But if you think about it historically, that's probably true. And if you're going to live in a 30 or 40-year retirement, you're going to live long enough to live through several market downturns. Let's say 3, 4, 5. And what if you experience one that lasts a year or more? We haven't seemed to have had one for a while.
2000 to 2003 was
3 years.
Really difficult.
And then 2008 and 2009 was pretty bad too. And since then, we really haven't had too much. So here's what you need to think about. We know it's coming. Shouldn't we be planning for it now? And if you plan for it, the chance of it biting you is diminished.
Yeah. So here's what's often confused. Wealth management isn't about maximizing returns. It's about making sure your returns match your needs. There's a stage of life where you're growing wealth, and there's a stage of life where it matters a lot less. And what matters more is, I don't want to run out of money.
I think another important point to make is that accumulating wealth is a lot easier than decumulating wealth. They talk about it, more people die on the way down from Mount Everest than they do going up Mount Everest. And I think the same holds true in retirement.
Well, you know where the top of the mountain is. You don't know where the bottom of the mountain is. If you live to 100, you probably didn't plan for that.
So I think when we think about decumulating without running out, that's the stress test. It's not just how much I have, but is it going to last if I live to be 85, 95, or 105?
So if this is the kind of thinking you want more of, not just the flashy stuff, just the questions that actually matter, hit subscribe. We put out new videos each and every week. So goal number 3, align your cash flow with life transitions. Timing matters as much as totals.
The cash flow questions are really simple. How much am I going to need and when? It doesn't have to be any harder than that. because you need structure to your money so it's available when you need it. We can't have money that we need in the near term in the stock market. If you were going to buy a house and settle in a month, would you put that money in the bank or would you put the money in the stock market? Put the money in the bank because you need to know how much it's going to be. But every day of your life, every month of your life is going to be the same way. And when you do that, it takes some of the market risk out of things. So you're not pulling from your portfolio in a down year because we know the down year was coming and we already have it planned for.
And when we talk about retirement income, there are three big moving parts most people don't think about. The first, inflation. What feels like enough today might not be enough in 10 years.
Almost certainly won't be enough in 10 years.
Two is taxes. That's a moving target, especially if tax laws change.
And we happen to think tax rates have nowhere to go but up. At some point, we're not going to have a choice.
They're not going to change in a good way. The third is healthcare. Costs that can blow up your plan if you don't account for them. I met with a client today that said they're averaging 2 implants a year between the husband and wife. 20 grand. That's not really accounted for. That's coming out of the kind of the extra stuff.
And there's cataract surgery. There's hearing aids. My mother-in-law needed a new set of hearing aids. They were $6,000 each. So these are real costs. And when we look at retirement, again, we look at it as a math problem, and it can be calculated. You need software. Most people need software to calculate it. But most people entering retirement, they haven't thought about these three things together. They've got this number in their head, and they haven't stress tested it, and they haven't matched it up with reality.
The fourth goal is reduce the complexity before it becomes a burden.
I think it seems like the average advisor, and in fact, our whole industry, has always tried to dazzle people with knowledge. There's targets, and there's alpha and beta and standard deviation and diversification. And we use all these big fancy terms. And the reality of it is people, one, don't understand it, and two, don't really care. They want to know if they're on track or not. So I think our business makes things so complicated so we seem smarter. And we kind of say the opposite. Simple doesn't mean unsophisticated. It means intentional.
So I think of my poor golf professional.
Poor golf professional.
Every session, he asks me the same kind of questions. What do you want to get better at? What are you struggling with? Answer is usually everything, but what he wants to do is just work on one or two things, not all 20 things at the same time.
Just to be clear, there are at least 20 things in his golf swing that need to be worked on. The pro only gives him one or two at a time. But that's how planning should work, right? Because we can't fix everything at once. And here's what happens. If we could get the first order of business right, and that's to get the big things right. And when you simplify, when you reduce the friction, that's when we see progress. And when people start getting at this, they start doing things and they see the momentum, it just builds on itself. And before you know it, it's almost like they know as much as we do.
Yeah, it's fun to watch. Progress builds confidence. Confidence fuels momentum. Once you get started, once you knock a couple things out, you're much more likely to accomplish a few more things, and then a few more, and then you can see the finish line.
Yeah, like in sports, it's always, when you go out in the basketball court and you make your first shot, your second shot's a whole lot easier. If you miss your first 5 shots, that 6th shot's a little harder to take. And I think the same holds true with this. So goal number 5, and this is really important, find a personal chief financial officer, personal CFO. Now, this doesn't mean you have to work with us, but it does mean having somebody who can help coordinate everything for you.
So when you think about it, you already probably have a CPA. You're likely to have an attorney, maybe an insurance agent as well. Here's the question that nobody asks. Are they talking to each other?
And in most cases, they're not. And that's where things fall through the cracks. A personal CFO is someone who's going to act as a coach and an advocate and a fiduciary for you, somebody that's going to quarterback all these things. And I think equally as important, the relationship management between all these other professionals. It's somebody that asks the right questions. It's someone who keeps the pieces connected so that you and your family don't have to.
So here's the real value. You don't have to hold it all in your head anymore. You have someone who knows the plan, who, and this is really important, anticipates the problem before they happen, who picks up the phone when something changes, and then when they do that, they know what to do next.
So let's bring it back. There are 5 goals. Number 1, know your number. Number 2, stress test your portfolio. Number 3, align your cash flow with life transitions. Number 4, reduce complexity. Number 5, get yourself a coach, an advocate, a fiduciary, a personal CFO in your corner who can help coordinate it all.
The right time is rarely someday. Thoughtful planning, which is an act of care, is not just for you, but for the people you love as well.
And if you're wondering what to actually look for in that person, the one who quarterbacks the whole thing, watch this video next. We'll walk you through exactly what separates a true personal CFO from someone who's just managing your investments.
So maybe you'd rather just have a conversation to see if this approach even makes sense at all for your situation. Click the link below to schedule a call. No pressure, no pitch, just a chance to talk through where you are and where you're trying to go. Because investing is the easy part. It's everything else that takes a team.